Hi, I'm Tom Lydon, editor of ETF Trends here in Orlando, Florida at the TD Ameritrade Institutional Conference. And I'm here with Cathy Saunders, head of the Registered Investment Advisor business at Putnam. Thanks for being with us, Cathy.
Tom, it's great to see you again.
Yeah, it's great seeing you. Listen, 2013 was an incredibly busy year, and I know it was a great year for Putnam. Tell us some of the great things that you've been working on in the advisor space.
It's been, well, it was a terrific year. In fact, the best year that we've had in the last over a decade, as a matter of fact, and rooted in probably the best broad-based investment performance story that we've had in the history of the firm.
Well, congratulations.
Thank you.
As you look to 2014, what are some of the big mandates? I mean, great year in the equities markets, but I know it's not just core equities that you folks work on. You've got a lot of alternative strategies that you're presenting for advisors, right?
We do, and you know, it's feeding an appetite that a lot of advisors are asking a lot of questions on right now, and maybe I can start with fixed income. If you take a look at the fixed income markets right now, you saw the 10-year go from about 1% to 3%. If you take a look at the Barclays Ag, it was down in negative territory for the first time since 1999. It's been down 3 times in the last 20 years. So that prompted a lot of questions from advisors on what to do with their fixed income holdings. And it really boils down to not am I going to own fixed income, but how am I going to own fixed income? So one of the things that we see, if you look at some of the conventional and traditional fixed income products, 90% of the risk is domiciled in interest rate risk.
Right.
What we've done with some of our strategies, and I think we talked a little bit about this last year, is we've extracted duration from the equation and still sought out some very eclectic and interesting opportunities that we see in the fixed income space right now, which have generated some great returns. Our diversified income trust strategy, as a matter of fact, was up over 7% last year.
So you've got this rising rate headwind, strategy, short in duration, diversified not just domestically in different fixed income classes, but also overseas as well, right?
You got it, you got it. And in fact, what we do is we really pay attention to that duration equation, very duration aware. Sometimes we can be slightly negative, sometimes neutral, and positive if we need to be. But certainly in a rising interest rate environment, it makes a lot of sense to take interest rate risk out of the equation.
Good.
And being the size that we are, we have an opportunity to take advantage of some of these very eclectic opportunities, whereas some of the larger funds that are out there, you know, when you get to 100, 200 billion in size, can't really take advantage of some of those opportunities.
Yeah, absolutely. So talk about some other alternative strategies as well, because as we survey advisors, they're saying alternative strategies as far as 2014 is on the top of the list of things that they're looking for.
They are. That appetite, it continues to grow. And we talked about this a little bit last year, but we launched a suite of absolute return funds about 5 years ago. All of them have met and exceeded their objectives, both on the performance side as well as on the risk side as well. That appetite continues to grow. But one of the things that's been really important is the educational process. I mean, you think about 5 years ago, this was a category that most advisors knew very little about. So one of the first steps that we took was to educate on what absolute return investing is all about. And then secondly, how we're approaching it a little bit differently out in the marketplace than our competitors.
That's right, you talk education. I know on your website you have a lot of white papers. If people go to putnam.com, they can get that.
Absolutely.
And you know, as far as advisors and investors that tend to be ETF centric, that come to ETF Trends, in the alt space, you know, we're a little bit challenged because we don't always have that many options. I think one of the things we're going to be talking about at our Alts and Income conference in May is a variety of liquid alt strategies, and we turn to our friends in the mutual fund business to be able to really look at all those options, and Putnam is right up on the top of the list.
And well, we appreciate that, and certainly one of the things that we've seen most attractive about these strategies is liquidity, the transparency, and low fees. Those are things that people are really looking for. And you know, the first year we raised $1 billion, and those strategies across the firm were up to about $10 billion in 5 years. So certainly the appetite is there, and we're getting recognized for that out in the marketplace. In fact, last October, just getting back to your point on education, we did a series of 75 meetings in October of last year across the country, talking about new solutions and a new way of thinking about investments, all targeted on some of the things that we're doing in the alternative space, both in fixed income as well as in our absolute return funds. And alternative is mainstream now. I'm wondering how alternative it really is these days.
Right, well, it still begs for a lot of education. We still have a lot of work to do. Congratulations on your success, and thanks again for all your educational support, because it really means a lot to advisors today, and especially to investors. So thanks, Cathy.
My pleasure, Tom. We're in this together. Appreciate catching up with you.
Thank you.